Welcome back, Alpha Hunters. Hope everybody is doing well this week. The markets are closed for the week of July the 14th. So let's see what went on this week. Now, for all you bulls out there, I'm going to continue to do you a favor and leave the thumbnail as bearish so that somebody here is making money. But as for price action this week, we had a slight gap down on Monday, and then it was kind of just a choppy day, but ended off the session lows, especially really in that last minute. If you do go to a 1 minute on Monday, that last minute, nice little pop from basically the middle of the day trading range up to the daily highs. So nice little move there on the last 1 minute. And then on Tuesday, nice little gap up, kind of retested lower and then pushed higher into the middle part of the day. A little sideways consolidation and pushed to daily highs at the end of the day. Now, when Tuesday came, I was kind of looking for a continuation lower early this week from last week, and we didn't get that. And Tuesday was kind of the clear indication like we were going to go higher. We're going to get another push higher, and then pretty much Wednesday, gap up. Didn't really do too much on intraday trading there on the SPY, but nice gap up off the CPI data. The CPI data did come in at 3% year over year, and the market was expecting 3.1%, so that was down pretty good. But it's the core inflation that a lot of people have been watching because it hasn't been dropping off over the past several months, and it was expected to come in at 5%, and it came in at 4.8%. So that's what led to the gap up. We ran a little bit higher for the first hour or so, and then kind of came back down, broke down a little bit from the open. Slight bullishness for a couple of hours into the middle of the afternoon, and then kind of like a pullback a little bit into the end of the day, with the SPY closing below the open on Wednesday. Then Thursday, we did get PPI. PPI came in at 0.1%, and the market was expecting 0.2%, so down a little bit. So basically, the Fed's been doing its job. It's getting the inflation under control. It's been coming down pretty good over the past several months. So that's what led to another gap up on Thursday. A little bit of sideways price action there for about the first hour and a half, 2 hours. And then we kind of just steadily pushed bullish for the rest of the day until about that last 15 minutes. Then we had a nice little drop. And then we had a nice little gap up there on Friday. A little bit of a sideways action there to start the day, first hour. And then we kind of just traded lower then for the rest of the day, kind of going all the way into the close. Now, I'm not going to go through any stocks here, but on the live stream, we were looking through quite a bit of stocks. And one thing that I was noticing is there was a lot of stocks like NVIDIA, Alphabet, AAPL. There was a lot of those kind of stocks that have been leading a lot, especially over the past several months. And they were having very high volume, very large upper wicks on the daily. AMD was another one, very large upper wick there on AMD on the daily. So I would definitely be a little bit cautious here because there was definitely a lot of profit taking and exhaustion volume kind of coming in on today's price action on some of those stocks that had been leading the market. Okay, sector performance for the week on the S&P 500. We can see energies were down the most, or underperformed the most. I guess they were still up on the week. They were up 0.5%, but they were definitely underperformed the market quite a bit. Staples, the XLP, were also an underperformer for the week. Industrials, the XLI, underperformers. Financials and healthcare, also underperformers. Outperformers for the week, utilities, materials, barely outperforming the market this week. And then real estate, tech, communications, and XLY, discretionaries. Now, one of the things you notice is, well, energies actually was outperforming pretty well even into early Thursday, and then the switch happened and they started really underperforming into the day on Thursday, and then Friday they got absolutely hit super hard. So they went from basically the week's best performers early Thursday morning to the week's biggest underperformer by the close on Friday. Taking a look here at week over week option change, and we can see that there was quite a bit of puts coming out this week, especially in the August 25th and September 15th, quite a bit of puts, and even this next Friday, July 21st, with July 28th actually seeing quite a bit of a call buying, and also November 17th seeing quite a bit of action there on the call and put side as well. The new sentiment survey came out this Thursday morning, and it actually dropped off on the bullishness, which was actually rather surprising, considering we were kind of breaking out there on that Tuesday, Wednesday. I wonder if a lot of people got in their surveys maybe towards the end of last week and over the weekend when things didn't exactly look the most bullish, but I'll be curious to see how it comes out this next Thursday. Taking a look here at the Fed Watch tool on rate probabilities. And for the next FOMC meeting coming up on July 26th, we can see that, well, the rate odds actually went up week over week, even though inflation came down and is probably going to be in that 2% range next month when we get CPI. We still saw the rate probabilities for an increase in July go even higher. And then for September, we saw a little bit of an increase over the week at a higher level of another rate hike there in September, but most likely looks like it's going to be a hold. November looks like it'll be a hold as well, but the rate odds for an increase in November is actually starting to climb. And then for December, we are seeing higher rate odds for another hold, with more of an odds to be 50 basis points higher than we currently are. Taking a look here at the Federal Reserve balance sheet data, did actually tick higher this week. It's the first time in 5 weeks that it actually did go higher week over week. Did go higher by about 1.6%. So there you go, a little bit of an uptick there. So we'll see if that continues to happen going forward. Now, the VIX did have a little bit of a higher open on Monday, as a lot of anticipation for the CPI data coming out Wednesday morning. And once CPI was done, you can see it really dropped off here on Wednesday, getting kind of down to those lows where it's kind of been in over the past really about month or so. So we do have a busy couple weeks coming up, but I know in 2 weeks we will see probably the VIX go kind of wild, as we will be getting a lot of big tech earnings and also the FOMC. Take a look here at the dollar index, the DXY, and oh my goodness, it dropped off this week. Now, this wasn't, I guess, too unexpected. And we were kind of talking about this earlier in the week as we were seeing it just kind of break down that little support level it had towards the middle of June. And we just came slicing right through the 101 level. And basically the next spot to stop was going to be these highs all the way back from March of 2022, which is around the 99.50 area, the mid 99 area. So it kind of made its way there. And, you know, it saw a little bit of a bounce there on Friday. So if you're looking for a play on the dollar, you're probably going to look for a retest up into the 101 type of area, into some of these lows that it's put in over much of the year of 2023, and then you're going to look to take that probably bearish. I would say have a stop loss up here over the May high, towards the end of May high, and if it gets back over 102 and starts to consolidate, that might be a consolidation to push it bullish if that does kind of happen. But that's just kind of my look on it, and if that does happen, then you can lower your stop loss to these highs and just say, hey, you know what, if it does get back over this level and starts to consolidate, then that was just a fake breakdown, and it's probably going to go bullish. But I don't think that's a likely scenario. Honestly, I think it's just going to retest probably into the 101 area and then look for that breakdown. 10-year yield broke down pretty strong this week. Monday, Tuesday, Wednesday, Thursday, every day it was just down except for Friday. Friday found a nice little bounce spot. Got into this consolidation area through much of the month of June. Kind of zooming out here, it doesn't look like it's going to drop off. Like, don't think that it's okay. This was the top and going to drop. I mean, this could still be a consolidation and an upper trend push, right? I mean, this could very much be a cup and handle type of play here. And it still does have a lot of the moving averages moving up in the bullish direction. So it's going to take a little bit more time to see if this really does break down. But if it does get below, I would say this low back on June 1st, that might be a pretty good low to take out to say, okay, now it's done probably going bullish. And it might still go sideways for a period of time, but I would say it's at least done going into the bullish direction. But looking at the 2-year yield, what was kind of interesting here is when we were looking at this today on the live stream, was the 2-year yield over that same time period doesn't really look like it's setting up anything bearish. Really, this just looks like big time sideways consolidation, and it looks like it's going to try and push bullish. And even on Friday, it did throw in a nice little bullish engulfing candle over Thursday. And the other thing you kind of notice here is even the month of June, it was kind of just trending bullish, and it continued that into the beginning part of July, which then July, it actually took out this high from March. It snagged that last week, and then it pulled back this week. And all it really did was pull back into this little previous high that it put in late May. So all it did was break out, come down, retest, and it might look to continue in that bullish direction. If rates do continue bullishly, this is going to put pressure on the stock market, because that's going to be the same situation we had in 2022. Looking here at the 10-year and the 2-year inversion yield, and well, We did get a strong pop last week, but this week it was kind of just sideways consolidation. Friday, we broke down pretty good. That 2-year yield really kind of bounced pretty hard. So I would just continue to monitor this thing. Last week, it looked like it was about to rip to the upside. And then this week, it kind of just said, put the brakes on. So it's just kind of continue to monitor this. Taking a look at the gold trust, or the GLD, we can see that it did have a pretty good day on Wednesday, but really outside of Wednesday, for how much the dollar dropped this week, gold really didn't shine all that brightly. So I would definitely still be cautious here on being bullish on gold, just because it's not acting bullish like from what you see with the dollar dropping off as hard, or any kind of bearish activity we see on the dollar. We're not really seeing a similar type of bullishness response on gold. Taking a look at the HYG, the high yield corporate bonds, and every day this week, except for Friday, the bonds were up strong. Monday came out, was really strong. Tuesday is out strong. Wednesday, nice gap up, strong. Thursday, nice gap up, was strong. And the interesting thing about Thursday is it actually did get above these late March and April highs. Now, it didn't hold above those, and I was really kind of wanting to see this kind of push higher, and I'll show you what I was really kind of looking for, like on the IWM and the RSP, but a push higher, a couple days clearing above these highs, and then looking for the retest into those highs from back in April, and then taking that maybe bullish. But the fact it just came, it took those highs on a wick, and Friday immediately reversed, and you can see that reversal on Friday just came right down. Now this could just be a retest into some of the highs that we put in on June, but time will tell. We'll see if for the next couple days, maybe even a couple weeks, it just kind of sideways consolidates and then kind of look for the push. That would be kind of an interesting, but if it continues to fall here, that might have just been a wick hunt right there and grabbing some liquidity and moving the other direction. Similar kind of deal on the LQD. Nice everyday bullish Monday, Tuesday, Wednesday, and Thursday. Thursday got right above some of those highs for June. It did hold it on the daily, but on Friday you can see it came right back down. So yeah, similar kind of deal. Obviously it didn't even get close back to those April highs. But yeah, these bonds have been moving quite a bit over the past couple of weeks. I mean, it's just up, down, up. I mean, it's just crazy. Some of these bonds are just moving this much. Be curious to see what kind of happens going forward into next week, and even in 2 weeks when we get a lot of earnings and FOMC announcements going on. So there's gonna be a lot of things kind of going on that week. Taking a look here at the RSP, the equal weight SP 500, and this is kind of what I was talking about with the HYG, where you had a lot of these highs from June, even the first day of July, and even back in like November, December, some of those highs that it kind of just had a hard time getting above, and then it got above them this week. It held above them for a couple days, and then Friday, we got a nice little pullback there on the RSP, and so I would be looking for any kind of pullback into the 150.50 area or 150 area. I'd be looking for the bullish play if we got into that zone, as that would just probably be a retest into a pretty good support and resistance level, and that's what you're going to be looking for. But you can see how we got above it for a couple days on the breakout. So yeah, it definitely held. It's held on the weekly. That's what you're kind of looking for. Not with that HYG. The HYG just kind of had a little wick hunt and didn't hold it. So I would be a little bit more confident in taking the RSP bullish on a retest. The DIA, nice little bullish action on Monday and Tuesday. Wednesday, gap up, kind of pulled back a little bit. Thursday, sideways consolidation. Friday, another little gap up. Now, that was mostly led by the UNH, and you can see on the side pane here, the DIA was the only indices that was actually up. That had a lot to do with UNH had her earnings, and they are the largest weighting stock in the Dow Jones. So it is kind of do or die time for the DIA, okay? And I mean that wholeheartedly. Like we have been sitting here sideways consolidating. Well, a lot of people can kind of see this little pattern shape up here. We got a little inverted head and shoulders, and we're getting to that time period where, hey, this thing should be going. This thing should be going. So if it's not breaking out soon, maybe it will be coming right back down. So yeah, very soon it needs to be breaking out. And obviously the health insurance UNH is going to be a big part of that. Here's a look at the IWM. This is another one of those things I was kind of talking about, where we had that top just sitting here about the 190 level, 189.50 kind of level. And we broke out very nice on Monday and Tuesday, and Wednesday got above it, held. Thursday continued to hold. Friday looked like we started a little bit of a pullback. So Monday, Tuesday of this next week, I'd be looking for the quick retest into probably that 190 level and maybe even down to 189. But I'd be looking to be bullish on any kind of retest, especially if we got it early this next week. But a very nice breakout above what had been a little bit of a trouble spot for it around that 189 level there on the IWM. Ah, the Qs, the triple Qs. Well, I'm going to zoom out here, and it is kind of important to know where we got to. Well, back at the all-time high, we did kind of move sideways up here in a pretty good area where we did find support at the all-time high, kind of moving sideways back in December of 2021, was basically the highs that we just put in on Friday. So it is kind of an interesting area. It's kind of tough to get bullish right here. I would say definitely look for a little bit of a consolidation like we saw over the previous couple of weeks, and then maybe try to take that bullish. I could definitely see a pullback into the 372 to 370 area and trying to take that bullish, kind of just into these highs. You know, that might make some sense. If you do want to wait for a stronger pullback, I would say this high back here around 335 might not be bad. Obviously, it's going to take a little bit more effort to get back down to that level. But if we start to roll over too much, I think you're going to probably just get to the people being bearish again. And I don't think that might even be a good spot to be bouncing off of. So it might just depend, and we'll just have to eyeball it when we get there. The SPY had a nice little week this week, kind of like the Qs. Every day was bullish up until Friday. Friday just got below the neutral line from Thursday, and just closed barely negative on the day on Friday. The SPY also kind of came into these lower consolidation levels that it was having back in December. So yeah, I mean, they're kind of getting into an area where they're going to be smacking their head a little bit, and you know, it might be a good time for the major averages to at least rest for a little bit. But I'm still mostly just going to be watching the market. I'm not really going to be doing anything crazy. And I'm going to be looking for really two data points, okay? Now, the first one is going to be margins on earnings. Now, they haven't been the best, especially when you look at financials and some of those stocks that have already been having some earnings. But when we get to tech earnings here in 2 weeks, that'll be a big one. See if the tech companies that have been screaming bullish this entire year pretty much, see if their margins can kind of hold up, because a lot of people talking about AI, and I'm not really seeing how they're going to be making money on AI yet. So yeah, the first one, I'll be watching margins. The second one I'm going to be kind of keeping my eye on is consumer spending. Now, one of the things that has actually held the market up and held the economy up pretty good is consumer spending and jobs and wage growth. So if we start to see a slowdown in consumer spending, that might kind of end a little bit of the bullishness here on the market. So I'll be keeping my eye on some of the consumer spending stuff like credit cards, and some of those data points about credit cards only come out every 3 months. Gonna have to keep our eyes on that, but we don't get those data points all that often. But another little area to kind of keep your eye on a little bit, it also comes from the financial area, but commercial real estate and how that is impacting financial companies and the financial markets. Because the commercial real estate starts to be kind of a pain point for a lot of the financial companies and a lot of the financial markets, then we actually might see them cut back credit to consumers. So it's going to be curious to see just kind of how some of those dominoes fall. So have a great weekend. Alrighty, take care, Alpha Hunters.